Ladies and gentlemen, Quatu Management, one of the largest hedge funds in the entire world, with over $70 billion in assets under management, just recently put out a report on their Fantastic 40. These are their top 40 names in tech that they think are going to dominate the AI space and accumulate the largest amount of gains over the next 5 or so years. In today's video, I want to talk about those companies, their actual prices that they're expected to get to, and what that percentage actually means in terms of the change between today's market cap and where we're going to see it next. So let's jump right into it. No more fluff. And we can end up seeing the companies in listed of the highest total 2030 market cap. Okay. So the total size of these businesses, starting with Microsoft at reaching $5.7 trillion in market cap. This essentially would mean that their stock price would be $768, up from $479 as of today. So if we look at the actual percent change, it's roughly around 60%, or on an annualized, compounded annual growth rate, that's about 9.9%. A little bit faster than even Nvidia's, which I would completely disagree with. But they would still expect that Nvidia would go from $145 a share to about $230 in the same time frame, to about 5.6 trillion. We also have Bitcoin here, which is another one. We're not going to go through the entire 40-piece list one by one, but we're going to start talking about the outliers, and Bitcoin is one of them. At $106,000 per coin today, that roughly amounts to about $268,000 per coin, or a nearly $2 trillion market cap, or about a 20% compounded annual growth rate. By far the fastest accelerator in these companies that have extremely high market caps, even though it's not necessarily a company, it's more of a technology, but still. Meta and Amazon also reaching below that 10% in the 9.8-ish area, totaling roughly about 60% each, and bringing their share prices from $215 all the way up to $343 and $700 to about $1,100. But this is where it gets really interesting. TSM and Tesla are having massive gains. TSM especially, 25% compounded annual growth rate. Okay, we're talking about a company that's $900 billion in USD today that they are expecting to get to nearly 2.75 trillion, or about $652 per share. A massive gainer in this entire list. If we actually go through a little bit faster, you'll see OpenAI, unbelievable. Nearly a 40% compounded annual growth rate, or 440% in the next 5 years. This one's absolutely incredible. I mean, they expect it to be a top 10 company by market cap. This is not excluding some companies that they didn't even want to talk about. Like, as most people have realized already, Apple is not even on this list. I'll just break that for you. Okay. So they don't really expect good things. They're not even really following them anymore. They're falling behind in the AI race. That's very interesting. Okay. But OpenAI, on the other hand, going from the most latest valuation round, which was last month, of $300 billion to $1.6 trillion. If that ends up coming true, Masayoshi Son, who threw in the last $30 billion at the most recent valuation, which everyone said was crazy, will still be looking absolutely amazing if his money is going to compound at a 40% rate over the next 5 years. Potentially, we even see an IPO from OpenAI to sort of get to that valuation within that period of time. Oracle, Tencent, SpaceX, Netflix, ARM, and Ethereum. You guys can also see 20%, 10%, 18%. The slowest in the next little bit, Netflix. ARM at a 38%, which I'll just break it for you, is the fastest growing public company that they think will actually grow, or about a 400% change. So today, $155 billion company, $147 a share. They think that's going to go to $743 per share just over the next 5 years. Okay. Absolutely insane. Ethereum, they think, and this one's a little bit harder to calculate. The market caps are correct right now, about 306 billion. They think it's going to go to 763, but the outstanding supply of Ethereum is shifting like crazy. So I'm only using today's supply, which brings us to $6,300 per coin of Ethereum. Okay. But we have to realize that these stock prices are not including dividends. They're not including buybacks. They're not including new share issuances. Okay. So some of these could fluctuate to be even better than what we're saying. Like NVIDIA, for example, has a dividend. They have a buyback. They do all of these things, which is only going to accelerate the total outcome of these companies. Not only are they going to pay back into your business even more, but the actual share price will be higher than what it's even looking at today. But it's hard to sort of model out for every single one of these businesses what you think that their buyback rates or stock issuances are going to be for over a 5-year period. Going on to these two, because I think this is a lot of fun too. Palantir and ServiceNow, a company that famously Amit had picked for his 2025 stock market draft, and a company that I picked for my stock market draft. Couture Management thinks that this companies, both of them, are going to continue to accelerate. Okay. Palantir is going to reach a share price of $223 in the next 5 years, or a 60% increase, whereas ServiceNow is going to have a share price of $2,466, or a 150% increase. The difference between a 10% compounded annual growth rate and a 20% compounded annual growth rate. Unbelievable. Stripe, this is another one, going from essentially $91.5 billion as of their most recent funding round to $511 billion, 41% compounded annual growth rate. If we look at the way that ranks across all of these businesses as a percent change in their business, they're number one. That's unbelievable. Very, very high conviction from Couture Management to say that Stripe is going to grow faster than the likes of ARM or OpenAI or some of the other companies that we're going to talk about that even have smaller potential market caps here, which I also think is fun. ASML, Alibaba, Salesforce, Spotify, Shopify. These are another good list of names here. Essentially, what we're seeing is that, the range goes from anywhere between 60% for the slower growing companies. You're really not going to see much slower than the 9% that they think is going to compound annually, where the other range is about 150%. So these 20% compounded annual companies like Spotify or Shopify or Intuitive Surgery or Surgical, which is also growing very, very fast. So you can see how those rank as well. And coming up near the bottom, not because they're the slowest growers, just because they have the lower market caps, which are not even small. They're $300+ billion businesses, okay? But what we end up seeing here is that Salesforce is growing in this certain area. Databricks, Anthropic, these companies, these private companies, they seem to be putting a massive emphasis on how fast they're expected to grow. So if you look at the ranking on percent changes, Anthropic is number 2, Databricks is number 1. They're only second, by the way. Anthropic is only second to Stripe right here, which is number 1. So they actually think Anthropic will be the fastest growing AI play by far at over a 40% compounded annual growth rate. Databricks not far behind, nearly a 40% compounded annual growth rate once again. AppLovin, CrowdStrike, Mercado Libre, Uber, XAI, love all of these businesses. Essentially what we're seeing from these businesses is that 300 plus or around $300 billion market caps, and the growth rates are expected to be insane. Okay. 20%, 22% compounded annual growth rates, much faster than the S&P 500, landing AppLovin actually in the 10th spot for fastest growing companies by Couture's expectations. Okay. XAI, 8th fastest, 28% compounded annual growth rate, or essentially 3.5xing from where we are today. So $80 billion to $281 billion. And then lastly, we have Binance, Revolut, S&P Global, Booking Holdings. These ones are not as fun, in my opinion. I mean, Revolut actually lands pretty high in the fast-growing range, landing in number 6, or about 38%. Okay, total of 5xing their business. So 48 billion to 242 billion. Absolutely crazy. Binance expecting to grow very fast as well. It's a pretty interesting list. So if we quickly look at the averages and the totals here, what we can see is that there's about $23 trillion worth of businesses just in these 40 names today. They think that list goes to nearly 47 trillion just by the end of 2030. Okay. We see the average here is actually much, much faster than what the total rate of change is. And it's pretty easy to see that. If you look at the high companies that make up for the bulk amount of this market cap, the $5.7 trillion businesses, the 5 trillion plus, okay, the compounded annual growth rates of those businesses are roughly around 10%, okay, aside from Bitcoin. Whereas you get to the smaller names that have 300 or less billion-dollar businesses, their expected rate of change is north of 20%. So Even though the average is much faster, nearing a 20% compounded annual growth rate, the average across the big names and the small names is actually bringing it down to 15% rate of change. Okay. So a little bit interesting whenever you look at individual businesses versus the total of the market caps of all 40 businesses. If we also just go ahead and rank these from not worst to best, best to worst here, you can see the list of companies that they are expecting to do best. Immediately, you're going to notice that the majority of them are private businesses. Okay. So, what we can see Stripe, Anthropic, OpenAI, Databricks. Okay. These are all very exciting names. ARM is going to be the fastest public business. We have Revolut, XAI, Binance. TSM is one of the ones that I'm really shocked. I mean, I'm not really shocked. They're doing amazing things. They've got a complete moat, but the underappreciation for their business right now versus where they expect they'll be in 2030 is a massive gap. So that one's a very interesting one as well. Makes me want to think twice about opening a position, not just in my draft, but in my own portfolio. And then OpenAI, Tesla, these are all very exciting names in the top 10 of the fastest growing businesses. But for the most part, they're private entities. Okay. In terms of things that I'm shocked by, Revolut is ranking much higher, actually making the list, and Nubank isn't. Whenever you compare those businesses side by side, one has grown much faster than the other, and that's been Nubank. I mean, their execution has just been unrivaled by any of their other fintech competitors, including Revolut. Now, they see that the next 5 years for Revolut is going to be amazing, but I would also like to think that Nubank also has an amazing future for the next 5 years, going out into other countries as well, just like Revolut is doing. And potentially, if they carry that same level of success like they have in the only 3 geographies that they're currently dealing in, maybe they could capture some large percentage of total accounts going elsewhere as well. But overall, I love this list. I always listen to what Core2 management has to say because they're very, very great investors, some of the best investors in the entire world. And obviously, I'm very tech focused in my opinions, and I love thinking not just linearly, but compounding growths on these businesses. So it is sort of hard to think about multi 10 or $5 trillion businesses into the future. But that's honestly where I think we're going. And I would actually put NVIDIA higher than Microsoft, but I'm excited to see what Microsoft also does as well. But ladies and gentlemen, if you like these sort of reports on what Wall Street is doing, let me know down in the comments down below. But until next time, bye for now.